All right, guys, welcome back once again. SB here. Thanks for tuning in. Got a little bit of information for you today. Not a whole lot, but it's something that is pretty good news. It should calm the waters just a little bit until next week at least. But first and foremost, if you're new here, guys, if you enjoy some of this content, make sure you give me a like. Even if you don't subscribe, if you just like the video, that does help out quite a bit. So I will try to earn your subscription throughout time. All right. First and foremost, if you are worried about the banks, we did get some good news in today. It's just come out, and let's get right into it. Swiss regulators to provide 108 billion liquidity assistance. Now that is a big amount of money. All right, so here we go. Swiss authorities have announced that UBS has reached an agreement to acquire Credit Suisse in an effort to prevent further market disruptions in the global banking sector. The move comes as Swiss regulators aim to prevent a crisis confidence in Credit Suisse from spilling over into the broader financial system, with the finance minister warning that a bankruptcy of a globally important bank could have irreparable consequences for financial markets. So the Swiss central bank has stated that it will provide liquidity to the merged bank with 100 billion Swiss francs, 108 billion here in the US, in liquidity assistance allocated for UBS and Credit Suisse. While the deal value has not yet been disclosed, a report from the Financial Times suggests that it exceeds 2 billion. With the takeover of Credit Suisse by UBS, a solution has been found to secure financial stability and protect the Swiss economy in this exceptional situation, the Swiss central bank has said. It goes on to say Swiss financial market has assured that all business activities of both banks can continue with no restrictions or interruptions. It also goes on to say Credit Suisse has been under intense scrutiny in recent times. We all have been aware of a lot of those, some of those activities. Man, they have been pretty sketchy, if you ask me. So this actually helps clear the air as far as Credit Suisse and the problems that have been coming to surface or coming to light from them. And this is a big deal because of the fact that this is a big bank. And anytime a big bank were to go under or have liquidity issues, it sends out a ripple effect across all banks, and they all suffer. So this is a big deal, and it's something that it makes you feel a little bit better. All right, so here we are. We're on business today, and according to this was on March 17th. It says J.P. Morgan, Citi, Goldman Sachs, and others inject $30 billion to First Republic. This was something that was kind of buried, not really, but kind of wasn't very mainstream. There was a lot of stuff going on with Credit Suisse, so it kind of got the back burner. This was something done that was on Friday. It was a multi-billion-dollar lifelines for troubled U.S. and European banks, shored up investor confidence and bolstered sentiment in battered stocks. Large U.S. banks, like I mentioned above, they injected $30 billion in deposits into First Republic on Thursday, rescuing the lender caught up in a widening crisis triggered by the collapse of two other mid-sized U.S. lenders over the past week. So this package came less than a day after Credit Suisse, which has now been resolved. While Asian stocks were mostly higher in the morning trade of Friday, concerns still remain whether a global financial crisis has been fully averted. But this is a good sign with these two issues coming to a little bit of a resolution. And it puts me at ease a little bit better. But you have to ask that question. Why would all these other banks inject so much liquidity into a bank like First Republic? It's because they don't want it bleeding over into their system, and that is what you call. That's what I call a little bit of wishful thinking, because they all act in the same way, right? So, although policymakers have been keen to stress that the current situation differs from global financial crisis of 15 years ago, citing better capitalization of banks and greater availability of funds, recent data indicates that the banks in the United States have been seeking record amounts of emergency liquidity from the central bank, leading to an increase in the size of the Fed's balance sheet after months of contraction. The secretary affirmed that despite the difficulties, the nation's banking system is still robust, primarily due to resolute and potent measures taken after the downfall of Silicon Valley Bank. The rescue effort for First Republic Bank was put together by top power brokers, including Yellen, Fed Chairman Jerome Powell, and JP Morgan CEO Jamie Dimon, who together discussed the package on Tuesday, according to a source familiar with the situation. So it's not like this isn't new stuff, right? We have been seeing the reports for a couple years now where JP Morgan and other banks were stockpiling emergency funds just in case something like this was to pop off. And guys, unlike the big banks, we don't have options like that, right? We don't have the information that they have. So whenever you're seeing those reports years in advance, you need to somehow get into your mind and think that maybe I should be doing something similar, right? But what can we expect going forward this week and into next week? One of the things that we can expect is a 25 basis points rate hike for interest rates. The Fed has no choice. They have to raise interest rates. If they don't, they lose all credibility. And if they lose all credibility, then they're going to be in no better shape than the banks that they have been trying to save over the past couple of weeks. So I look for precious metals to come down just a little bit and ease off, maybe a week, maybe 2 weeks, and maybe we find that bottom that we've been looking for. And possibly after that, after the dust settles, I know a lot of people are thinking that the Fed is going to pivot and start cutting interest rates. I don't think, in order to save face, that they can do that right away. I think it's going to take some time. But who knows? The situation is changing rapidly. Let's see what takes place this week, and then we can just go from there. But until then, guys, I am stacking up a little bit of dry powder in anticipation of a pullback, and definitely hoping for that pullback. Really am. Don't want to pay $2,000 and up for a 1 ounce gold coin. And I definitely don't want to pay over $30 for silver, but it is what it is. That's the environment that we are in currently. And that's why I've been stacking hard, seriously hard over the past couple of years in anticipation, because things just, since 2019, they just haven't seemed right. So with that, guys, I'm going to leave you today. Thanks for watching. Make sure you like, comment, and subscribe, and keep grinding on your stack.